We continue with our revision of financial reporting, formerly called F7, now FR, from ACCA. Let's go to our today's question. Our today's question is from section B, question number 1. Let's go to the required. Calculate the consolidated goodwill at the date of acquisition of Cyclic, 6 marks. B. Prepare extracts from Bycomb's consolidated statement of profit or loss for the year ended 31 March 2015 for 1. Revenue, 2. Cost of sales, 3. Finance cost, 4. Profit or loss attributable to non-controlling interest, totaling 50 marks. I have gone ahead and put here some headings, some template that we'll be using to explain this question today. The first question is for us to calculate the goodwill. So to calculate the goodwill, we have the consideration, we have the NCI, we have got the net assets at acquisition. Let's read the scenario. On 1 July 2014, let's take note of that. Our year end is 31 March 2015, like here. But the acquisition was 1 July. So we'll say July, August, September, October, November, December, January, February, March. That's 9 months. On 1 July 2014, Bycomb acquired 80% of Cyclic Cost equity shares on the following terms. So Bycomb acquired 80%, of which means 20% belong to the NCI. A share exchange of 2 shares in Bycomb for every 3 shares acquired in Cyclic, and a cash payment due on 30 June 2015. The payment is due after 1 year, of $1.54 per share acquired by Bycomb. Bycomb's cost of capital is 10% per annum. At the date of acquisition, shares in Bycomb and Cyclic had a stock market value of $3 and $2.50 respectively. We will use this information to calculate the consideration and the NCI. But to calculate the NCI, we will also use the information on note number 4. Bycomb's policy is to value the non-controlling interest at fair value at the date of acquisition. For this purpose, Cyclic's share price at that date can be deemed to be representative of the fair value of the shares held by the non-controlling interest. This statement authorizes us to use $2.50 to calculate the NCI. Now let's calculate the share exchange. How many shares were acquired? 80% multiplied by the equity. We are given the equity here of 12,000, like that, multiplied by the shares 2 were issued whilst 3 were acquired at a price of $3 times 3, like that. Then we have got a deferred payment. For every share acquired, there is a payment of $51, but this $54 we need to discount it to its present value using the cost of capital. So we say 80% multiplied by 12,000. We get the number of shares that were acquired. Then we multiply every share by $54. Then we discount this by 10% for 1 year. So we discount for 1.1 to the power 1 because it's for 1 year. Then we get that. If we have discounted, we need to unwind the discount. So to get our finance cost, we need to unwind the discount before we forget. So we say that figure multiplied by 10%. As we say, this was a mid-year acquisition, so we cannot say times 12 over 12. So we can simply say times 9 months, so 9 out of 12, like that. We get our finance cost. Then now let's have our NCI. We said our NCI has got 20% multiplied by the equity of 12,000 multiplied by $2.50 as we were authorized by note number 4. We get our NCI as 6,000. Now let's march on to the net assets list. We have got the equity of 12,000 at acquisition, 12,000 at reporting. We have got retained earnings at the beginning of the year. That's not the acquisition date. So we'll put those retained earnings like that because they are before 1 July. 13,000. They are before the acquisition date. Then, as this was acquired during the year starts at 1 April 2014. So as this is mid-year, we need to see how profits are accruing. So we need to look for the statement where we are told how the profits are accruing. Usually the profits we are told that they accrue evenly throughout the year. We are told here that let's read note number 2. On 1 April 2014, Cyclic commenced the construction of a new facility financing by a bank loan. Cyclic has followed the gap in the country where it operates, which prohibits the capitalization of interest. Bycomb has calculated that in accordance with interest of 100, which accrued evenly throughout the year. So we also assume that the profits they accrue evenly throughout the year. So now we'll simply say at acquisition, that was before 3 months, April, May, June, before acquisition. So we'll simply say the profit for the year for the subsidiary is 2,400 multiplied by 3 divided by 12. We get the profit before at acquisition date. Then at year end, they remain as 2,400 like that. Right, now let's go to note number 1. At the date of acquisition, the fair values of Cyclic's assets were equal to their carrying amounts, with the exception of the item of plant, which had a fair value of 720 above its carrying amount. So there is a fair value in plant of 720,000. If we have adjusted the asset, we need to also adjust for its excess depreciation. We are told here that the depreciation, the asset had a remaining life of what? Of 18 months, whereas the company was acquired 9 months ago, so we multiply by 9. We get 360 like that. Then here under note number 2, we are told that Cyclic did not capitalize the interest whilst the company was supposed to capitalize the interest. So if the company was supposed to capitalize the interest, but the company expensed this interest, so this interest reduced the profit. So in order for us to capitalize it, we need to add back the interest to the profit. As this interest accrued evenly, we'll simply say 100 multiplied by 3 divided by 12. We get at acquisition interest up to the date of acquisition, from beginning of the year up to acquisition was 25, but at year end the total interest was 100. That needs to be added to the profit. Now we have to take note of the impairment. If the net asset, if the NCI is valued at fair value, then we can include the impairment on the net assets list. But if the NCI is valued at the proportionate net assets, it means the NCI does not have the share of the impairment loss, so we mustn't include it here. So the impairment was for 500. as we are told by note number 5 here. So here we have completed our net assets list. We can now sum up our net assets list. Then we say year end less at acquisition. We get the post acquisition retained earnings. Now let's march on to the PAP. We are told the PAP under note number 3. Sales from Bycomb. Bycomb is the parent. So the PAP does not go to the NCI list as the seller is the parent. To cyclic in the post-acquisition period were 3 million. This 3 million we will use to reduce our sales and also our cost of sales. Cyclic had 420,000 of these goods in inventory. So the PAP here will be 420 multiplied by 20 divided by 120. So the PAP is 70. Now we have finished our notes. Let's calculate goodwill. Goodwill will say the consideration what was paid by the parent. The parent paid through exchange and also through the deferred payment like that. The NCI's portion was 6,000. The net assets at acquisition, they were 26,845. Then when we sum up, we get the goodwill at acquisition. That is the goodwill that was required here. Then now we want revenue for the year. The consolidated revenue for the year. Let's see how we go about it. The revenue for the parent, we are now adding across 24,200 plus. For the subsidiary, we don't take the 10,800. We only take 9 months of the revenue. So we say 9 divided by 12 multiplied by 10,800 like that. Then we mustn't forget to subtract the 3 million, which is in thousand, the 3,000 like that. We get that figure. Then for our cost of sales, we take the cost of sales of the parent, 17,000. We add 9/12 of the cost of sale of the subsidiary, of which is what, 6,800. We less the intergroup sales of 3,000. We add the PAP of 70. We are also told under note number 1 here that depreciation is also charged to cost of sales. So we also add the depreciation of 360. We are also told that in note number 5 that impairment is also charged to cost of sales. So we add again the impairment like that. We get our figure for the cost of sales. Then the finance cost now, we will simply say take 400 of the parent, we add 9/12 of the subsidiary. The subsidiary finance cost is 300. But this 300 includes the 100 that we capitalized. So we'll reduce the 300 by 100 like that. Then we add the finance cost that we calculated here of the unwinding of the discount. Then we get our figure like that for the finance cost. Then now the profit, the last one here is the profit attributable to the non-controlling interest. So the non-controlling interest has got 20% multiplied by the post-acquisition profits of the subsidiary, of which we calculated it here. So the profit attributable to the NCI is 203. Please take note, these sessions are for revision purposes only. They do not cover or substitute your your work that is needed when revising and reading your textbooks, whether it's Kaplan or BPP. But this is to highlight certain principles that you might have missed and also assist you when you are towards the examinations. And also, if you are new to my channel, please do not forget to subscribe, like, and share the video links with others. Thanks for watching.